Aloha Internet. We are coming to the close of the stock market for the trading day Thursday, October 16th, 2025. It is 3:30 p.m. Eastern Standard Time at the moment. The market will close at 4 p.m. Eastern Standard Time. Welcome to the show. We have the FANG pulled up here at the moment. Maybe a bit of a correction, MAG 7. Let me change this to look at our general markets. All right, while we're pulling that up, in attempts to get a um, bit more of a format to be a better help for you to make money in the stock market, gaining financial independence without spending all week in front of a computer, what we'll do is we're going to pull up this first. We're going to start it right here. Right. We're going to start it right here. Going to start with the financial statement. So overall, you see we're on the 16th today, and I have the 16th put here. So this morning, when I woke up, I logged into various accounts that I had, and I put down the numbers from these different accounts: bank accounts, brokerage accounts, credit card accounts, any type of accounts that have to do with money, because I'm looking at the stock market as a way of paying these bills, right? And these accounts are where I'm drawing the money from. And so we want to start, if you haven't already, you want to start building a map of what are your monthly expenses. And this is a Google spreadsheet, and it's really easy. If you don't have a Google account, you can make one for free just for this. Start tracking, figuring out what your expenses are, and then it makes it easier to figure out how to pay some of these bills with trades. Okay, so we're going to leave that. We're going to leave that idea. We're going to leave that to rest for the moment. But that is an idea that we're going to continue to come back to. We're going to think about monthly bills, and we're going to use an example of $55 because I had a cell phone for many years that was $55 a month. So I like to think in terms of getting the cell phone paid. And if you can consistently pay a $55 a month from without working, that's a first. That's a good step. So when we revisit that, we'll make that more of a format in our conversation of the bubble show. But something else that we're gonna have a format of is checking out these markets. So overall, the overall stock market, as you see, is down, and the VIX has shot up. And oil down, Bitcoin down at the moment, breaking this pivot point here. Gold up. Gold is still bullish, and silver is riding the coattails. The dollar strongly coming down. And let's switch this back to before we go to the Mag 7. Let's take a quick a quick view through all these ETFs. So now we looked at the kind of the global markets on a pretty big scale. Now we're going to look at the stock market specifically, just ETFs pertaining to the stock market. There might be GLD in here, but it's not in here right now. But that's definitely one that could be in here, and that it's still a stock, right? It's not an actual gold position. It's a way to play price action, just like Bitcoin. With these two, IBIT and BTCI, with these two, it's not an actual Bitcoin position. It's just playing the Bitcoin. It's a way to gain exposure to the Bitcoin price pretty easily. So let's just open up these Before I open this up, you see, one reason why I'm going to open it up is so we could see it better, but also they're organized. The way it's set up right now, they're organized in a specific way. So, for example, here's the cues for this window that's labeled one. We are going to it'll be our ETF, stock market ETF window, and we're going to lead with the cues. And the reason why I'm leading with the cues is that I think, in a way, I think it's just more accurate now. Even though someone that's younger or newer could say, like, and they could, like, with the SPY, like, that's kind of old school, and the Nasdaq is kind of took over as what's going to be the best way to predict movement of the markets. Maybe they're together. I'm not sure, but I'm putting the Qs over SPY and SPY under that, and really going to bring this into my thinking. And then we got QQQI here, which is a great monthly ETF made by the same company. The same company is also making this ETF, with this kind of being like they've won a lot of notoriety for this one. But these type of ETFs, these are a little bit dangerous. This XDTE, which I don't think I have on here right now, stuff like that, it can be a little bit dangerous. And sometime a we'll look at a I guess maybe that sometime is going to be right now. Give me a second to pull it up. We will look at a cone of probability. All right, we'll look at this cone of probability. I'm pulling it up right now. There we go. Boom. All right. So here's FCX. FCX. This is a company that we follow. Also, I have info on FCX right here. We see FCX right here, right? It's profitable. It's net profitable. It as far as is the current share price of around 41 and a half. Is that a good deal to be buying this company at for this price? And based on the PEG and the enterprise value to EBITDA, there's some degree of yes to that. And the PE ratio is not down in the 12, but there's other stuff that's like right here. I think this is Nvidia at 51. Here's 51 of something else. What is it? What's that? Nvidia and Netflix, they're at 51. Meta's at 25. Microsoft's at 37. Amazon's at 32. Apple's at 37. So when you compare the PEs of the Mag 7 with the PE of FCX, and then we didn't look at their enterprise value to EBITDA. Nonetheless, there's a reason why FCX is here, right? These Mag 7s, these are here for like bellwethers, indicators of the overall market, but FCX is here because it is a company that's in a good price range. That if you have a $10,000 account, a $5,000 account, you can easily be fully this being your stock, like this being the stock you trade with that size, because from there you have 1 to 2 contracts. You have enough to do 100 to 200 shares, and it moves enough and it gives good dividends. So overall, that's why it's here. Now I pulled this up to look at the cone of probability. Now you see with FCX, see how it's pretty much equal 50-50 up and down? Well, watch this. XDTE, the weekly dividend pair. Look at this. Look at that slope. Look at that. I mean, this Thinkorswim is predicting your share price to go down. Now, I don't know if how much you followed along with the high yield covered call weekly dividend pair yield max type of community and all the stuff that built up around it. but there would be um, this would be a subject of debate in YouTube video is like, well, you got to look at total returns because of the dividends, and I agree. I agree. And even while I agree, it's still funny that this is what it does. And let's look at QQQI. Not as bad, not nearly as bad, and that's one reason why it is on this in this window, but XDTE isn't. I'm guessing, even though I have a compared to my position in QQQI, my position in XDTE is huge. BTCI. Same thing, like more of this downward slope, right? We're seeing more slope to the downside. So you got to it's wise to factor that into your game plan, and that's what I'm doing now. But in order to kind of counteract that, you can look at some things like Coca-Cola and MO as far as Dividend Kings and try to balance some things out that way. FCX. We are okay. So and then we see that we know what this one is kind of watching the market with SPY, and I am 100% corrected. Here's XDTE here. I have a pretty big position in this, and as far as do I regret it? No, I don't actually regret it. However, I can help other people a build portfolios better going forward, and including using XDTE. I think figuring out what is a good price to buy XDTE at. I think that's the key to having a lot of fun with that, waiting to get the right entry price. So we got SPY and XDTE. They're basically correlated. QQQI and Qs. Those obviously, hopefully it's obvious that they're correlated. So just like high yield covered call funds based on these indexes, which in theory, if you have enough money, you could do the same thing. And then in theory, you could also kind of do the same thing on FCX. So it's taking these option strategies, and instead of paying someone through an ETF to do it for you, you doing it yourself. Or you can do a combination of both. That is definitely helpful for me. So this one now, I'm leaving it on here. I'm leaving it on here because this one, I was totally wrong. These are not the sector ETFs. This is something totally different in this window, and I'm just realizing it now. I'm happy to be showing you this window, but I apologize that I was under the wrong name. It is one because this is the main one we're going to be using. That's it. That's what's going on. And then sector ETFs, which is over here, looks sort of similar, but different purpose. This is really what we should be going through after we go through the stock market. So my bad. I'm getting everything organized here, getting this bubbles stock market show, getting everything organized and what the format is going to be. But our layout, our flow of video content should go more like this. We go over the markets, okay, and we still see we're going into the closing, got 15 minutes left. Still basically the same thing, like almost all the markets going down with gold and silver only ones showing any sort of relative strength right at the moment, but not going down so much that it's anything to be alarmed about. And so now we switch to sector ETFs. That's right. Oh man, my apologies about that. We switch to sector ETFs. Qs. Same thing. Going to do the Qs first because I want to see what's going to happen. I think we can make more money with kind of putting the focus on the Qs. SPY, Dow Jones, Russell, VIX, volatility for the VIX. Excuse me, not volatility for the VIX. Maybe that's what I should change it to, the VVIX. But right now, it's the futures of the VIX, and we might take these two out because it when I pop these open and go through one by one, so we can see pretty well. Like now, if I made a shorter time frame, if it wasn't 1 year, it would be a lot easier to see. Like I could this easily could be like 1 month, 1 day. That would be pretty clear. But the thing is, it makes it easy to see a lot of information, a lot of different underlying instruments really fast. However, I think a year on the year time frame when we're starting to trying to make profitable decisions, I think looking at a year time frame is just leads easier to money. So I might take those out. Let's just pop these open real quick and look at them, and they're gonna look somewhat the same. That's what the beauty is that when you get familiar with them, they just end up kind of looking the same, and you start noticing because the change really usually isn't super big if you're looking at it all the time. Like here, yeah, that's a pretty big change, but look at this change. Boom, look at how big that change was, right? So yeah, but this was a big change. Now we're back in here and we're having a bit of a down day, but it's kind of centering out here, right? And I wouldn't be surprised if it kind of bases out here a little bit lower than where it was, and then maybe it tries to hit that high again. Kind of the same look overall for SPY and Dow Jones, a little different look. It looks more already like rolling over, right? It looks like it's topping out more than anything. And in the way it's looking right now, it looks like it's going to start getting kind of top heavy in it. And it might almost kind of want to test this 200-day moving average, which would put some pressure down on the market. And now, with the day earlier today, it looked, I think it was, it was looking a little bit different than it is now, but now it's obviously looking like this, which is looking like a big sell-off. But look, we're right here at this 20-day moving average. Who knows? This one doesn't look like it wants to come down here and test the 200-day moving average right now, but it's definitely testing this 20-day moving average. And we'll see what happens, right? It's still like in the top 50% of this down candle here, and it's right in this area of support. I wouldn't be surprised, right? I wouldn't be surprised because look at this big move up here, that run up there. I wouldn't be surprised. And from the Mike Norman MMT economic videos on YouTube that I'm watching consistently, everything he puts out, I think there's nothing to really be worried about. Let's go through here sort of fast on different sectors, but this one, okay, so let me rephrase that of nothing to be worried about. There's always something to be worried about in the stock market, and we have to plan in our worry. We should have built in our we should pre-factor in worries to what we're doing, and that's one reason why we're looking right. But we know overall the stock market, um, 5 out of 7 Mag 7 stocks that are really influential in the stock market are going sideways. So it's not a surprise to see some sideways looking, breaking down over here in the financials too. Just like the Dow Jones, it looks like it's going to come down here and touch this 200-day moving average. If the financial stocks are not on board with a rally, we can watch the financial stocks, and when they are or are not on board with a rally in the stock market, we can make better decisions that way. So it's not that it won't rally without the help of the financials, but when the stock market does tend to kind of go up, right? There's 3 ways it could go: up, down, or sideways. But overall, it's an upward moving type of thing. And then if the financials are going sideways or down, while that maybe takes possibly a little bit of momentum from what we might expect to the upside. Try to bake that in. Dow Jones, or that's not Dow Jones, that's the transports, which I'm getting going to start paying a lot more attention to due to Greg Kaproff, Master Trader. And energy is kind of like in this basically sideways, and you can see this sort of a sideways 200-day moving average, and nothing surprising there. Real estate, probably a good. I don't know if it would be a good candidate. Yeah, it would be a good candidate to at least look into some sort of short strangle, iron condor, selling credit on, figuring out a way to sell credit on both sides if it's going to move sideways, but there might not be any actual premium. SMH, semiconductors, moving, looking pretty strong, moving to the upside. XLP, staples, yeah, kind of moving sideways. I actually have sold um, short. I have shorted strangles on this before, so this one can work. We can look at that some other time. VIX, okay, we were talking about the VIX going up, the overall volatility of the market moving up, and that's the futures of it. Maybe I should try to put, let's see if we can do, yeah, the volatility of volatility, which that's increasing too. So maybe it gives us an idea of like an exponential move. Oh, let's save this. I think that's better. That's better for us to help analyze than the futures of the VIX. I think the volatility of the VIX. All right, and then what is that? Yeah, consumer discretionary. Was strong, and now it's rolling over. We got same thing. It's probably sooner or later going to be testing down here. It I see it's testing this support resistance area right here, right now, and we'll see what happens. If it stays above it, obviously it's going to stay above. But if it starts breaking down below, we've got another kind of. It's probably if it starts breaking down below here, it's probably going to break down in phases. It'll start testing heavier on the 230. So right now it's like testing between 230 and up here. If the price action starts migrating like more to the middle of here and it starts kind of the top quarter of here and then slowly starts to be like the bottom quarter of here and the top 50% of here and just slowly moving down, then I can see that happening. And then if it then it has like in these $5 ranges, looks like to come down to the 200-day moving average, but might just fall through some of that stuff. Some of the support and resistance might be weak. Overall, though, the market I think is sideways. Could go up, but there's definitely like the sideways movement in it. XLU, the utilities, look at them been screaming up. So maybe there's this. Well, there has been sector rotation with money coming out of different sectors. The sectors that are going sideways to down, money's been flowing out of some of those and going into some of these going up. XLB materials kind of going sideways. Might be worth looking at. All right, so we went through the whole thing. Now let's get back over to this while we're going through the end close of the market. We'll see everything that pretty much see everything that we need to see here, and we can talk about doing some stuff. So did I don't think we went over the MMRI today at all. I don't think I did that. So I'll figure out a way to work that in. Probably going to be in the beginning of the day versus during market close like this. But in we have a variety of stocks here for everybody. Our lowest entry point of playing this game is the one share gang. So you can buy one share at a time. You can buy more than one share at a time, but we're gonna talk in terms of buying one share at a time. And anything on here could be considered fair play for that. I like the I like Coca-Cola. I like MO. I like FCX. I like those for buy and hold long term. Probably the safest out of all the tickers here that are actual companies. Like, okay, maybe not as safe as the Qs or the um, SPY because though maybe these might be, but as far as companies go, for sure. As far as besides these two, oh, and the Russell, yeah, it's an index as well. So VIX you can't really quite invest in. It's more of a measurement thing. Um, and then as far definitely as far as companies, like let's see, these four are companies. This is a company. This is a company. Well, these two probably with this one as well. This is probably these two for sure the safest, quote unquote safest. But I think this one can mix in there pretty well also. And since we are let's get in the habit of doing this, when I'm saying this one, Coca-Cola and Mo, and we looked at the stats of FCX earlier, right? Profitable, and we're looking for enterprise value to EBITDA like 10 or under. looking for a peg close to a 1, and we're looking for this to be around 25. Lower the better, though. So Mo, look at PE ratio, really low. Okay, around closer to 3 on the peg, right around 10 on the enterprise value to EBITDA. Profitable, profitable, profitable. Profit margin, almost 60% profit margin. This is a really profitable company. Will this be a good price to buy it at? It seems like it. It seems like buying. If you could buy and take over this company, this is your company. You're the owner of it, and you're buying it at this price. I don't mean $64. I mean $64 times how many ever shares there are. But that's one way to think about it. In fact, my recently as I've been working on a book study group on on Meetup.com, a book study group with the 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 sample book being The Intelligent Investor by Benjamin Graham. I realize that he is one way that he's measuring the value of a company is to outright buy it, And I had never really thought about that. I actually have bought a business before. I've definitely tried to sell businesses before. I looked at on business brokers online for years of looking at buying businesses and uh, yeah, and I never really thought about it so much with the stock market though. So yeah, I would love to buy this company. I mean, that's super super profitable. Like if this was your company, you'd probably making a crap ton of money. Coca-Cola, um, not as profitable. Your enterprise value to EBITDA right now is closer to 23 than it is 10, but it's a profitable company. PEG is closer to 4 than 1. PE ratio is not bad. It's just like it's sort of overpriced. It'd be better to get it at a lower price. How much lower? I'm not sure. I'm trying to figure out how to take like these present day prices and reverse engineer like what price do I need to buy Coca-Cola at for it to be a 10 um, enterprise value to EBITDA. But I haven't, whatever numbers I've come up with, whatever work that I put into that, I haven't felt completely happy with the outcome. So these three, all right, these these three are good to if you have not bought a stock before. These three are good to buy. You get a good price. How can you get a good price? Well, I'm looking at 3 month. What we're looking at here is 3 months from left to right in one day. And I can show that to you right here. 3M1D. So 3 months from left to right in one day. Stock market's getting ready to close, and we'll be closing in about 2 minutes. So we're looking from left to right, 3 months, and each red or green thing, which is a candle, is representing one day of data, of, of price trading data. So the lowest that's traded in 3 months of trading time is $65. And what we could do if if you're interested in Coca-Cola, you can change this, or actually, you could change this to a different time frame, or boom, we can just do this. This is actually going to be I think, a lot better. A little more complicated if you're a new trader. If you're new to Thinkorswim, maybe it's not as easy for you to be pulling that off just like that. But the main thing is I don't want to be changing. I want to keep this like this. Yeah, I like being able to see all these at one time. And then let's bring Coca-Cola. So your Kona probability here, it's obviously on the bottom here. It has the dates. And then over here is the prices. And this is one standard deviation on the pink one. And then the blue one is a little bit more than one standard deviation. I don't know what standard deviation it is, but you can see up here on that blue one, it's going to say 80, 100 on one side, 80 on the other. And then the pink one is like 68. And I guess 68 is one standard deviation. So this lets us And let's see, and these red, the reason why these red ones are here are these are um, option expiration date. You can take that off by coming over here under the settings and moving under time access. Show this show Friday expiration. Remove that, it'll take it off. I purposely have it left on here though with this one because I use this a lot when I'm selling options and calculating where it will likely not go. However, you could look at it as where it might go as well. But so Coca-Cola, what's a good price? 65. We're looking at 6 months of data now instead of 3 months. Now we're looking at a year of data. 60 is the lowest price that Coca-Cola has gotten. We have like 5 moving averages here. Here's the 200-day moving average. So it's Coca-Cola is below its 200-day moving average. It looks like it's kind of moving back up, but you can see in here, if you could go back in time, just like a month ago or so, this would be a good area to buy Coca-Cola in, possibly, right? And we go back and um, if we need to, if you needed to reassure yourself, you go back and you look at like what are the the stats on it. Coca-Cola. One thing I don't have here right now that I will add is dividend info as well, because this company for over 50 years they've been raising their annual dividend. You get paid 4 times a year. This is a great company to have be a kind of pill. Oh man, hope that doesn't be a pillar of your kind of a backbone of a potential portfolio, at least to get started. And yeah, I'm short puts here. I'm trying to buy it at 60, but I would buy it at 60. I think anywhere somewhere but like 66.50 and lower seems to be kind of a decent deal. Okay, the stock market is over. Stock market is over. Let's take a look at how everything ended. It just ended down. Where's the volatility in here? Here it is. So VIX, yep. Yeah, so we can see the overall market, pulled back today, and it's probably setting up for something good. So that's why like see these four here and this one. I think that's it. Four. I got 5 of them showing here. This is pulling back to I don't know what point, but at some time in the future, there's a chance this stock is going up again. It's going to be testing this 150 area. I don't think it's done testing this 150. I think we're going to see another time. Does that mean go out and buy shares right now? No, it doesn't actually, but it definitely means pay attention because it's pulling back. This white moving average looks like it's going to start possibly crossing through this blue one. So maybe the downtrend is going to continue. If you're like a one share trader, you want to be selective on when you're buying. You probably take a look. It looks like it's some ice hanging off here, and it wants to drop down here to this 125. And we see that it traded had some action here around the 125. So maybe it's going to come back and test that, or maybe it's not going to go all the way to 125. Maybe it's going to the lowest it'll go is like 127, 126.50 or something. I don't know. Maybe it'll be just on top of that. But it's worth watching to see what's going to happen because sooner or later, when the when the when when the VIX, it's not so much when the VIX is going down, but when these markets start moving up again, then these are going to be catching some good acceleration from those. So even if the market's not moving up, it doesn't take much. It seems like it doesn't take much for some stocks to move up when it's their kind of cycle to be, the popular ones like. Uh, so we're trying to find some popular stocks and without spending like an undue amount of time looking at popular stocks. Although I'm learning a lot more, I am in the process of. I will be learning a lot more about the Can Slim Mark Minervini method that'll probably be one of the next books that I'll really start looking into. A book kind of series actually, because I have all three of them, Mark Minervini books. So, so these are the stocks we have here, and overall, let's look at our markets. Do it that way. These markets are basically still moving, and so maybe that wouldn't be the best way. Let's look at the Mag 7. Where's our Mag 7? Oh boy. I guess I don't have the Mag 7 stock set up, so I will just do it right in here. FANG All right. Apple, that's still in this bottom range. No real change there. I feel like there's no real change on Amazon. It's like it's battling this 200-day moving average. We're not surprised. We saw a lot of stocks. Look at this one battling the 200-day moving average. It's not a surprise. We looked at a lot of these other stocks looking like they want to come down and touch the 200-day moving average, right? So we shouldn't be shocked to see. We should expect that. We should expect some bit of downward pressure going on. There's more. I'm not saying it's a downtrend, but the tide is not rising. The tide seems to be kind of not moving in or not moving up or potentially moving down a little bit. We'll see how much it's going to move down. How much is it going to move out? Looking the same over here on Google, traded all the way up here, getting close to this 260, but pulled back down here. So we're really in this resistance area here. If this kind of keeps happening, Google's not is going to transform from an uptrend to a sideways trend. See for how long, but Google and Apple are the only two ones that are not moving sideways, and probably they're going to join the sideways party sooner or later. And then we'll see how sideways, does sideways transfer to down? I don't know. I don't know. I don't know. But what I do know, to focus on things that I actually know, we can take a look at this. Okay, let's see. That was 2 days ago. Let's at least mark that October 14th, 2 days ago, 247. But from this last posting on here, you see this is a little bit lower. So I think I think it's a trader's market. The stocks go up, down, and sideways, and we should position ourselves to take advantage of all the different directions that they could go with different things. So, and I'm enjoying it. I think there's going to be time to add to our dividend portfolios. I think there's going to be lots of opportunity to sell premium, and I think there's going to be some opportunities to go directional. We have to figure out what our account size is and what our risk tolerance is, and how we are going to integrate this into our lives. As far as our other responsibilities we have to do, being at jobs or children or relatives, whatever it is, spouses, and we're going to be very, very profitable. So with that, I'll see you guys in the morning. I'll work on getting more kind of organized and to try to help be a backbone for you to be able to have something to refer to once, twice a day, once, twice a week, and have something to keep yourself moving forward in the direction of gaining financial independence without spending all week in front of a computer. Aloha.